Welcome to the dark side.
All right, guys, next we're going to talk about whole numbers and their significance. Now, we talked about the idea of actually drawing supply and demand zones based off of reversal candles, but there's also the aspect of whole numbers, which you'll see time and time play significant roles in areas of support and resistance. If you're looking at a supply zone, like again here, say if this is like $8 and it looks like a great area to short because it just went parabolic, but this is 10 here. $10 is going to be a much higher probability zone where people are going to get short on, or it's finally going to reverse, right? Things, I call them magnets. Okay, this is a magnet. Typically, when I would say in the stock market, things would just magnet to the next whole number. And when you see something just that close to the whole number, it just gets drawn to it. And so you want to be very cautious of that. And we'll see an example, a whole number play down here, of which I was actually short H bar Hedera hash graph. And we can see here on the chart, right, we saw a big reversal on the candle, pump up, and then another big reversal. And now we have the same opening and closing price here. So that is a level, but it's at 38 cents. So at 38, the next whole number is about 40 cents here. And you can see that's this zone right here. And just above that level, we have this supply zone here on that reversal candle. And so the extended range here is pretty freaking high. And then we have the other area at 50 cents, but it's quite a bit higher. When you're thinking, okay, maybe I should get short here, the potential for it to go up to 50 is also very high. So you need to be cautious about that, which is why you have to manage your risk and always use stops, because you don't want to start getting short under 40 and then have it rip to 50, which is going to be a much bigger loss than you want to sustain in your account. And you don't know if it is even going to stop out at 50. It might just keep fucking pumping up to 1. We never know what's going to happen, which is why it's so important to always use stops when you're trading these. But you can see what happened here. If we go down to the next chart, where exactly did it stop? It stopped right in that zone here, which wasn't exactly at 40. Like I said before, we're going to talk about here, typically there is the whole number, which it spiked out here, reversal candles, and then saw upper wicks and candle ranges that extended slightly over 40, faked everyone out, and then dropped, all the way back down to about 32 cents. So from 42 to 32, that's a significant percentage points move that you could potentially be locking in gains on that trade. So this is an example of looking at physical resistance areas, physical supply zones, and also combining it with, okay, there also is the 40 cent mark. Probably not going to stop exactly at 40 cents. It's probably going to spike over 40 cents slightly and then reverse and then fake everybody out into a bull trap. And so when we look at these psychological supply zone numbers, here's just an example. Typically in the stock market, say if we saw a parabolic move, $5 maybe, between 7, 8, 9, those are going to be less significant. The next big one is $10. I did an illustration over here, what the kind of key levels to look out for. You should probably write this down. So anything under $10, $1 through $5 are significant whole number levels. And then $10, basically 5, 6, 7, 8, or 6, 7, 8, 9 aren't that significant. They can show areas of resistance, but all the way up to 10 is probably the next key level. Coins over $10, significant levels are going to be 10, 20, 30, 40, and 50. Coins over $50, more like, 100, 200, 300, right? So the higher you go, the bigger the whole number. In intervals of 10, it's going to get, or intervals of even hundreds, it's going to get, over $100, 127 isn't going to be significant. Maybe 150 would be a lot more significant because it's, in an interval of 50, a little bit more even number where people might have a psychological barrier. When we look at it, typically, again, like I said, things don't just rip right into an exact number, right? Things are never perfect and never the same. So in the stock market, my kind of rule of thumb was the range was about 30 cents over the whole number, depending on what it is. It could be anything over the whole number, right? It might rip to 10.55 and then just absolutely get annihilated and dump, okay? But typically what you need to know, it's going to spike into a range over that whole number, and there's going to be a psychological supply zone in that range that it spikes over that whole number. And typically you don't want to short right underneath, because it probably 90% of the time isn't going to stop underneath the whole number. It's going to spike over the number into a range somewhere in there. We don't really necessarily know. If we have physical supply zones that we can draw over from a previous price action that was happening over here, right? That's definitely going to help, and we can combine those things together. But this is an area that we want to be watching for and combining our strategies of understanding supply and demand zones in addition to understanding the strategy of whole numbers. And if we come down here and look at some more examples, same thing that I drew here, let's just take a look at, this was Solana. At $100, that was, potentially a significant area where it might reverse, okay? And we can see it did spike from where? $100, basically right up to 130, right? Like when I said between 10 to 30 cents or 0 to 30 cents, in this case, since it's 100, it's 0 to 30. So we're just taking those similar intervals and strategies and ideas and potentially putting them on a higher level of time frame. And we can see it did fake out and it looked like a potential reversal. If you did not know that all this was happening and you saw this candle right here, this big reversal candle, this looked like it was going to just dump and roll off $100 and it's absolutely shit. The problem was this was also what? An all-time high, which is also blue skies, right? Blue S. We don't know. It's extremely difficult and dangerous to try to short a blue sky all-time high parabolic move because we have no idea how it's going to go. And then from 100, it just ripped all the way up into the next psychological number, which is 200. And what did it do? It went from 200, spiked to about, let's say 215. It didn't even get up to 230 before finally seeing that massive, 50% drop on Solana. So this is just an example of one all-time high blue sky breakout, or it looks like maybe at 100. Nope. Once it broke that high, right, this would be the off fuck zone that we talked about. As soon as that happened, and that would be your stop level as well, this thing ripped all the way to 200, spiked over 200 to about 215 before finally seeing that reversal. So this is just an example of seeing the whole number strategy, psychological support and resistance play out. Same thing here. If you're looking at a breakout from 5, the next significant levels, yes, 6, 7, 8, 9, are going to have maybe some, but the primo area that we would want to look for is shorting upwards in the $10 range because that's going to have a much bigger psychological supply. And if you have supply from previous price action over here, say if there's reversal or clusters back here that you can draw supply, that gives you more ammo to be like, okay, this is definitely going to be one. We have the psychological zone as well as the physical zone, and that would be a primo area for a reversal to try to capitalize short on. Looking down here at Sand, which was one that I made $20, $30, $40,000 on. I can't remember. I traded it twice. Just looking at what's happening here. Okay, so remember, I didn't mention anything about under $1, but under $1, it's similar to the 1 to 10, 1 to 5, 10 cents to 20 cents is significant, 30 cents a little less significant, but then 50 cents is definitely going to be significant. And then the next one would be $1, so 50 to $1, those are kind of two key levels, but also 10 to 20 is going to be significant as well because those are kind of key levels in addition. So we can see basically this thing bottoming out near that previous low on Sand, also level of 20 cents, a whole number there. And then reversing once it flipped over the 9, 13, and 20 EMAs, just absolutely ripped. Where did it rip to? Right into a 50-cent level, which is going to be a psychological level, PSY. So this is psychological level zone of 50 cents right here. So definitely key level. And then if we can look over on the zones that were previously in place, we do have this order block here, right? We have the reversal candle here, lower zone, high zone, and we can see the price action spiked right into that zone. Basically, right, this would be an area that we could potentially be getting in, right? This would be maybe one area to short here, 2 and 3. Those are potentially 3 areas to short. The lower zone, middle zone, base range, and then the higher range. And then there's the off fuck zone, which is slightly above it here. We don't know what's going to happen, right? And it spiked right into that range before reversing, 20, 30%. And I was able to capitalize short on that. And then where did it find support? At the 9, 13, and 20 EMA before making another massive run up, okay? So we can see this coming down, then just seeing another massive spike. And we'll talk about this later about when to take profits and how significant the 9, 13, and 20 EMA is and how a lot of times we want to just see this thing absolutely shit, but then we never lock in any profits and it just rips right off that support zone and makes another massive run up into the next supply zone, which is exactly what it did here on the next supply zone. Here we have the reversal candle, also the same opening and closing price, open price, closing price, reversal candle that we talked about. Also the range here, upper range, lower range, but with the base range here, you can see that this level also played true on this reversal right here. We also have the same opening and closing price right here. So basically in between this range right here and right here and right here, this whole range right here would be a solid area to get short, right? Because we have basically multiple clusters in addition to this whole cluster back here. And what happened on this particular move, this thing ripped all the way up right into this level right here, into right the exact base range from this candle before seeing a massive dump all the way back down to 30 cents from 70 cents, 50% drop. I also made money short on this trade right here. So this is an example. One, the first round trade, of which went right into the whole number. Also the previous supply zones reversing right into the 9, 13, and 20. Secondary bouncing right up the 9, 13, and 20. Huge fucking rip into potential zones, which is also 70 cents. Like I said, 70 cents is less significant than 50, but doesn't mean that 70, 80, 90 won't be key areas where people might start locking in profits, especially when it's combined with physical supply zones that we can clearly see and draw on the chart here on this actual chart here. So that was kind of a picture perfect area and illustration of seeing this work out almost to the T on sand, of which I believe I have recordings of my actual trades on this later in the video. But anyways, guys, that's it for whole numbers. Understand that we want to combine these actual supply zones by looking at previous order blocks and reversal candles on the chart. And if we combine them with these psychological zones that we can understand, basically it's never, right into the whole number. There's that psychological zone that's going to spike over the whole number, try to fake everybody out, because a lot of people put their stop, if it's $10, people put their stop at $10, okay? And then all of a sudden there's this massive spike right over $10, 20 to 40 cents above, and then it's an absolute annihilation where all the people that got stopped out are now freaking out. And then smart short sellers got in up here, especially if there's a supply zone here that we can drag over and combine with whole numbers. That's a winning strategy to get short.